Good evening, this is Nick Inman from VolumeProfileTrader.com on Thursday, December 8th, and the market got rocked today, down over 2% after basically a fallout from this rising, higher lows, higher highs. I guess you could call it a flat top. Today we opened up and traded lower immediately, so we have a gap lower and a continuation to the downside. One thing to note is if there are buyers lurking, then these levels that the market is coming down to, around anywhere from 12.15 down to 11.85 could be potential support. So let's mark that on the S&P, and that's simply a high volume area, which we will show on the next chart. And so, the market, it was at the top of the range, and talking about in a few videos how, waiting for the market to give us a pullback, and this is it. So we're waiting to see, is this pullback going to be met by buyers, or are the sellers going to basically dominate the top, this top end of the range and push this market back lower? My thoughts are, so long as Europe doesn't implode and there's some type of solution, these markets have a possibility of moving higher. But any bad news, out of the Eurozone, and it could be, a move back below 1180 down to the recent lows seen 2 weeks ago, and, possibly even 1120 on the downside. So we have a few names that we've been covering that, if you didn't take profits on back at the 1260 level, well, you were hoping for, a move up to 1300, which wasn't it's not like that wasn't a bad plan, but, the market, it ebbs and flows, and we had a move to the upside, and now we get a correction to the downside. So, this short-term whole moving average, it's still pointing up, and price is getting close to it. So we're going to see if buyers are going to buy the bottom end of this range, and if they do, it could be a nice buying opportunity, a chance to get long, and basically a retest of this 1268, 1270 level. So let's look at the S&P on an intraday basis to see how the S&P is trading this month against last month. Okay, so the S&P in the month of December, and I'm actually going to choose to do the whole month. All right. So in November we had a point of control around 1233, and the last day of November traded up there, held it, and then in the beginning of December rallied up to the value area high of November, where we tested that level 3 times and failed. We had a high volume area form in December between 1260 and 1252, and today, just like yesterday, we gapped lower from those levels. The difference between yesterday and today, yesterday we pushed back into those levels and we still closed within that high volume area, but we had a positive close relative to the open. Today we opened lower and continued down. We broke the point of control support for November, and now we're looking at this, the gap open from last week to see if that support holds. We closed at those levels, so we'll find out relatively soon. And ultimately, this thing, we do have some high volume around this range. You can see, volume starts to taper off down at these lower levels, but there's still some high volume from November. And other than that, a push down towards 1215, which is 1215 to call it 1208. That's the October point of control, and basically the bottom of November's high volume area. Value area. We have some decent volume at those levels, as you can see right here on this, the composite volume profile over the last 3 or 4 months. So there's some support, but we've also have broken major support. So it's sort of a, watch and wait. If you didn't take profits up here, you're late to the party, and you should have been taking profits and not being so greedy. But you live and you learn and you move on. So we've been talking about a few names that have looked like opportunities, both short and long, and I will explain them right here, right now. Okay, the VXX. This name, it's a name that actually I closed out today, but I bought it yesterday or the day before in the morning, and we saw a bounce, and the VXX relative to the S&P. The S&P was flatlining, and the VXX started to catch a bid and make higher lows and higher highs. And even yesterday, I'll zoom in some. Yesterday, as the market gapped open lower and traded up, the VXX didn't really go down. Instead, it just flatlined and actually caught a bid towards the end of the day, and continued and followed through into today. So looking at the VXX, what's going on here, we're bouncing off of December's point of control and high volume area, and I've moved up to November's point of control. 44 was my profit target. We touched 44 and some change, barely breached 44, closed at 43.68 or so. So my profits have, been reached for the VXX, and looking for some type of bounce in the overall market. If we get that, great. If we don't, what's that telling you? It's telling you that people are still nervous about what's going on over in Europe, and with the possibilities of global recession, and it's spooking people out of positions and making them sell. There's not a lot of volume in the market, and therefore the market's moving very quickly, and the swings are bigger than most people can handle. So most people are sitting on the sidelines, and that's fine, that's trading, but there are two sides to every market, and there are opportunities to make sides or money on both sides. So, for example, and I don't know what this looks like, but you can see similar, not as constructive as November, where we got a nice bottoming pattern and the point of control forming at the top of the range and having a nice move higher on TZA, which is the inverse, leverage shares. We're getting a similar, though not as constructive, development in December, and the difference is this development lasted about a month, whereas this development has lasted, a week and a half? So, given the move that we've seen in the market, and you can see this on the inverse, we're due for a pullback. And does that mean that we're going to be selling off, or I should say that the market's going to be rallying? And the answer is, it's hard to tell right now. This was a pretty wicked sell-off, and we didn't hold the point of control for November. So really this gap from last Wednesday or so, that's our line in the sand, and if we breach that, then it's back down towards, basically pushing towards 1200. As far as a name like Monsanto, which we've been looking for a bounce, it basically is broken support in my view, and these lower highs were enough to warrant basically get out and stay away. Even though truly the bottom of support is down towards 69.50, and it's still above those levels, it's easier to stay away from now. And then you take a name like Ford. Ford is now trading below the point of control for the range, and it looks like it's going to go back down and test sub 1060. So it's a name you want to stay away from. Likewise with Freeport. And let me get rid of all these lines, as it's just nothing but a mess. Freeport, December's point of control, we had a flush from it. Can't hold November's point of control or the high volume bracket, and we're waiting to see if these lows of the day, if they hold. If not, we're going to push down back towards 37. So Silver. Silver was a name that we were looking for, and I'm going to remove these drawings as well. We had, support, which I guess we still do in a sense, and we have resistance, and we're looking for a move one way or the other. Well, considering December's point of control is at the top of the range, that could always change given with time. If it get another couple of days with silver holding these prices, could turn this bullish. But we have some whole moving averages moving down. We are below the composite point of control, so there's nothing. We were waiting for a bounce on silver, and down nearly 3% on the day is not a bounce, it's a sell-off. And I was saying yesterday that if we do get a sell-off, you have an opportunity to get short, and with a target of sub 30. So if you didn't get short today with silver, it may be a little too late, down 3%, but this trade worked. It didn't have to necessarily be to the upside, and it shows that with a downside move. So one name, that performed relatively well, but not great, is Apple. And Apple was holding until the last hour of trade. The point of control for December started to breach through it. Is there still support on Apple? Yeah, around 389 or so, which has been a pivot for the month of December. But if we break that, it's down to 385. So there's not, as of right here, right now, there's not a lot to like in the market if you're bullish. And if you're bearish, there are some, today there was an opportunity, even yesterday there was an opportunity to get involved on the short side, and you're being rewarded today. The summit for the ECB ends tomorrow, and there can be some news that still comes out. And if it's positive, then sure, the markets catch a bid and probably rally back up to the highs from yesterday. But if not, it could be a further decline in this market, could catch some steam to the downside. So it's important to manage your risk. You had, for the overall market, you had over 3 days to take profits at higher levels, and if you chose not to, then unfortunately that's trading, and you didn't take advantage of the opportunity the market was giving you. So I hope this helps. And just to make it easy really quick, cover the NASDAQ. The NASDAQ's falling out of bed. We should have some type of support down towards the 2280 level on the actual NDX, the NASDAQ 100. On the NASDAQ futures, probably more towards 1260 or so. So we're at a potential bounce in the market, but we want to see, will this bounce be sold into? And if the news in the ECB is negative, then it may just keep going down. If we get some type of bounce in the market, people will probably sell into it. So it's important to, watch out. The only one that's performing relatively positive, as I had a horrible zoom in there, is the Dow. And although we're trading off of December's point of control, we're still outperforming relative to the S&P and the NASDAQ. And November's point of control, we're basically at a support level where we're looking for the Dow to hold. And if it does, that could help stabilize the market. And if it doesn't, look for something like the VIX, which is trading, as of yesterday, above its point of control and still moving higher. The VIX should test up to 32 or so. So overall, if you're long the market, you should be holding more cash relative to the last few days. And if you're short to the market, keep riding it down and basically take profits where you think buyers will be lurking. And don't pile into any one position, because the market, it's a whippy market, and on any given day the market can be up or down 2%. So I hope this helps, and I'll see you in the trading room tomorrow.